This cycle will wipe out everyone in 21 days. Ray Dalio. Ray Dalio has warned that the United States individuals and businesses might face a severe credit constraint, causing asset prices to plummet and the economy to collapse. In this video, we will take a look at why Ray Dalio believes that this cycle will wipe out everyone in 21 days. Ray Dalio has learned, in his 50 years of worldwide investing, that we are frequently astonished by events that have never occurred in our lifetimes. This prompted Bridgewater Associates co-chairman and co-chief investment officer to research 500 years of history, revealing patterns that emerge decade after decade, caused by economic swings, societal change, and world conflict. Such trends help him in identifying the larger challenges of the day. For example, he is currently concerned about the impact of inflation as well as disputes, both inside and between countries, which can lead to inefficiencies and resource misuse. Consumer prices in the United States grew 8.3% year-on-year, a decrease from June's peak of 9.1%, but still alarmingly high. According to Ray Dalio, this does not bode well for investors. You combat inflation with economic suffering, he explained. According to Dalio, when the Fed raises interest rates to combat inflation, the discount rate rises. When one makes an investment, a lump sum payment is made for future cash flows, and then in order to determine their worth, we take the present value of those, for which you will apply a discount rate. That is what causes all boats to rise and fall together. The three things that are now happening are the production of massive amounts of debt and the monetization of that debt, which is having an impact on inflation and everything else. The second factor is the number of internal conflicts, with populism on the left and populism on the right owing to the largest income and value inequalities. The internal strife is having a significant impact. Third factor is a great power clash, the rise of a great power in the form of China and the relative decline of the United States, as well as the fight between diverse forces, which we see represented in the Russia-Ukraine-NATO war. Like a doctor who sees many patients, examining the last 500 years of cycles reveals not only patterns but also cause-effect links. So, for example, there are several types of conflicts when there is a great power competition and there is no such thing as a world court or a world justice system. And usually there are economic wars, which we call sanctions. For example, in Japan they froze the same Japanese financial assets as the US did, and they also imposed economic sanctions that hampered oil imports. And when we witness these things, we need to remember that prior to World War II, due to economic conditions, there was populism of the left and populism of the right, which caused struggles that brought down four democracies during that period of time and turned them into autocratic governments. The billionaire investor warned that if the severely indebted US government steps up bond sales to fund its spending goals, private sector funding could dry up. He stated in a LinkedIn post that the Federal Reserve might compound the problem if it increases bond sales to calm the economy and prevent rising inflation. According to him, the influx of bonds into the open market could squeeze out the supply of private loans, resulting in tighter credit conditions for consumers and businesses. Because the amount sold must equal the amount bought, it appears most likely that will occur through a large contraction in private credit, which will lead to a lot less buying of goods, services, and financial assets, and thus price declines in financial assets and an economic contraction. Dalio wrote on LinkedIn, according to Dalio, it may soon become more difficult or expensive for Americans to get loans, mortgages, and other forms of debt. As a result, less spending and investing may occur, causing stock and other asset prices to fall and the economy to enter a recession. The founder of Bridgewater Associates also warned of rising civic unrest in the United States and an increase in foreign wars like Russia's confrontation with Ukraine. These two developments, together with mounting economic pressures around the world, constitute a very dangerous confluence of events, according to him. Dalio has previously chastised the Federal Reserve and the government for flooding the US economy with debt and cash, resulting in an asset price bubble. He forecast annual inflation of 4% to 5%, significantly beyond the Fed's goal rate of 2%, and interest rates above 4.5% for the foreseeable future. Markets are pricing in the Federal Reserve raising interest rates to a very detrimental, very damaging level, according to Dalio, who warns investors that a stock market crash is possible. In an interview, Dalio predicted that inflation would settle around 4.5% to 5%. It's still above the Fed's 2% target, implying that policymakers would have to raise rates to near 6%. The Federal Reserve will raise short-term interest rates to that level, which will be highly detrimental, very damaging to the economy, he predicted. However, the Federal Reserve is attempting to strike a balance by maintaining an interest rate that is high enough for the creditor, but not too high for the debtor. As a result, the rate of increase will reduce, but it will still be above 5%. most likely in the vicinity of 5.5%. This will continue to have an impact on all markets, especially stocks. Previously, Dalio predicted that interest rates above 4.5% would cause a recession and a 20% decline in stock prices, echoing warnings from Bank of America, Morgan Stanley, and Deutsche Bank. However, that damage has not yet been priced into stocks, he said, adding that markets have discounted a decline in rates rather than a rise, as well as a fall in future inflation. Inflation fell ahead of economists' estimates in October to 7.7%, but this was mostly due to external factors such as dropping oil costs, according to Dalio, and prices could remain higher for longer. Today's curve shows a fall-off in rates as well as a fall-off in inflation, but I believe it will remain higher than the levels that are currently built into market expectations. He went on to say, "This increases the potential of stagflation, which economists have been watching as inflation hit a 41-year high this summer." Top economist Muhammad El-Erian warned that the United States was already in a stagflationary debt crisis, while Dr. Doom, economist Nouriel Roubini, predicted a market meltdown that combines features of 1970-style stagflation and the 2008 financial crisis. Ray Dalio reiterated his belief that cash is no longer worthless, claiming that the dollar is more appealing than stocks and bonds. Dalio's reversal on the dollar comes as the Federal Reserve maintains its most aggressive interest rate hike campaign since the 1980s to combat inflation. Cash used to be a dirty word. Cash is really appealing right now. It is appealing in comparison to bonds. It is actually appealing in terms of equities, Bridgewater founder remarked in an interview with CNBC. The typical move is that when interest rates rise, the money supply gets tied. You lose the sections of the economy and the market that are in bubbles and require cash flow. As a result, you're seeing it in more than just long-term stocks. However, he noted, in private equity and venture capital. Dalio, who originated the phrase, "currency is garbage," previously predicted that the dollar will be worthless in April 2020 due to near-zero interest rates and an inflated money supply. However, with the Fed raising interest rates rapidly to cool inflationary pressures, the yield on the dollar has surged. The US dollar index, which compares the dollar to a basket of 6 currencies, reached a 20-year high last year as a result of the Fed's quick rate hikes. Higher interest rates strengthened the dollar by attracting more foreign investment. Meanwhile, stocks and bonds have taken a beating as a result of the aggressive rate hikes, with the tech-heavy Nasdaq losing around 34% last year. What's also occurring is that we've accumulated a lot of debt and money, Dalio explained. This includes dealing with concerns such as the US debt cap. He warned that if liabilities continue to pile up, the value of the currency will suffer. The one major thing leaders could do to make the most of this position is to consider that the greatest risks are these wars. The greatest threats are irreconcilable divisions that, in one way or another, will significantly harm the global economy, affecting the poorest people the most. If that is the number one thing that must be avoided, and you work together so that you can still have competitions, you can still compete. But you don't cross those red lines that will lead to these types of horrific disputes. That is the most crucial thing. And with that being said, it's time to end our video. Subscribe to the channel for more amazing videos like this. We'll see you with another interesting video.